I'm still expecting a first distribution by the end of next year. Operation Chokepoint 2.0 is very, very real. I mean, KYC is another aspect of the war on crypto.
What are your thoughts on a revamped FTX 2.0?
The odds have gone from somewhere above 50% to somewhere probably between 25 and 50%.
Hey, what's up guys? Aaron here. So in this video, we have Vlad, who works at Cherokee Acquisitions and Claims Market. We are talking about all things FTX, including their latest plan that was released a few days ago. So I hope you enjoy our chat and let's get to it.
My main takeaway in reviewing the disclosure statement that was filed on Saturday is how underwhelming it was and how relatively little incremental information was provided. It appears as though the debtor has lost some of its very considerable momentum. And so one of the really impressive things about FTX is for a company that was privately owned, that had close to zero financial reporting, that was run so loosely and with such little controls, and in a situation where, in a case where the large majority of employees left shortly after the bankruptcy commenced on November 11th of last year, the professionals running it have done a remarkable job in rapidly reconstructing records and marshaling assets. So I keep my own records on selected cases and the milestones that they've achieved. But some people who don't have a lot of experience in bankruptcy, they might look at the FTX process and they might think this is just taking way too long. Like, just tokenize everything, give me back a tradable token, let me monetize it. Let's get going here. But there's a process and there's a whole construct of law, regulation, and precedent that needs to occur. And for a company that went from having no real centralized records, and it was the proverbial dumpster fire, to quote John Ray, they were able to file the schedules, just showing creditor by creditor for 1.9 million creditors, the positions in their accounts as of November 11th. They were able to do that in 4 months. Like, that is incredible. That's very, very fast for any company in comparison with Lehman, which on the one hand was much larger and much more complicated than FTX. It was a public company, it had a huge accounting and control function, filed Ks and Qs, had SARBOX, all the controls you could imagine. It took them 6 months to file their schedules, and FTX did it in 4. And then FTX filed their draft plan at the end of July, which is sort of a framework plan. But that was, extremely rapid. That was, inside of 9 months. It took Lehman 29 months to file its plan, from when it filed bankruptcy in September of 2008 until January of 2011. So the case had a lot of momentum moving forward. I think the momentum in some ways accelerated after the September 11th and September 12th meetings between the debtor, the official committee of creditors, the ad hoc group, and other selected key creditors and constituents. And if you recall, the company put together a very comprehensive slide deck that was filed in the docket on September 11th. And so from then on, a lot of progress was made, which culminated in the October 16th plan framework, the plan support agreement that also had the details of the preference settlement. And so between September 11th and October 16th, they made huge progress. And apparently between October 16th and December 16th, in those 2 months, things really slowed down in terms of plan momentum and structuring. So there's really very little in terms of a plan construct that's in this 138-page disclosure statement that wasn't already in the public domain, mostly in the October 16th plan support agreement. There's obviously significant amounts of factual data, like the sale of 1.8 billion crypto between when the order was signed by the judge enabling the debtor to sell crypto until, I think it was maybe 2 weeks ago, when they reported, like, as of the first week of December, but not a lot of incremental progress. And it appears as though on some topics, they've changed direction. So, for example, in the September 11th slide deck, there's in other places, there was a description of category A, digital assets, and category B. And the category B was lower market cap, lower trading volume assets that were going to be treated very differently. There's no mention of category A or B. Those terms are not stated anywhere in the disclosure statement. So I feel that they're just taking a different direction there. The previous defined term for the conversion table was a valuation matrix. That term just is not used anywhere in the December 16th plan and disclosure statement. So that tells me that not only they're slowing down for a reason, and I think that reason is they're encountering opposition from various groups. I think one group is the regulators. And so there's obviously quite a bit of progress made in a FTX 2.0 entity, which we don't really know what the shape of it is, but there's no mention of FTX 2.0 in the disclosure statement. And so my interpretation there is that the regulators are just slowing the whole process down and maybe are very opposed to it. So as your audience probably knows, Aaron, there is a war on crypto in America. Operation Chokepoint 2.0 is very, very real. It's hard to see direct evidence of that. I think regulators often operate in the background and just have sidebar unofficial communications, but the message is very, very clear. And so I'd say of all the crypto cases, it's obvious that FTX has the most regulatory scrutiny. I think every single US regulatory body, all the federal entities, including some of the leading states like New York, DFS, they're all watching and they all have opinions and they're all commenting to the professionals running FTX. So I think that's probably creating opposition and difficulties for an FTX 2.0 restart.
What are your thoughts on a revamped FTX 2.0? Will the regulators let them do anything?
Well, if you would have asked me prior to December 16th about the odds of FTX 2.0, I'd say the odds were better than 50% that there'd be some type of transaction, some type of bootstrapping transaction where potentially non-US creditors would get the equity of, certainly at the time, an unregulated US exchange. It is possible for an FTX restart to eventually become regulated and compliant, but that process would take a long time. There's no employees. So if you're literally starting a true new entity, I imagine that the regulators would be extremely thorough and take their time. So again, to answer your question, prior to the plan being filed, I would have said in excess of 50%. The fact that there's no real mention of it now, it's still a distinct possibility, but I think the odds have gone from somewhere above 50% to somewhere probably between 25 and 50%. I mean, it's a pretty big deal that the first true plan and disclosure statement has no mention.
Regarding the FTT tokens, did you have any thoughts on that?
I was going to get to that. They're not actually being zeroed out in this plan. If you look at the definition of the treatment, there's a provision in the waterfall for value to potentially flow to FTT. So the press release regarding the settlement with the liquidators in the Bahamas uses the word equity. And maybe there's a global settlement that will result in changing this December 16th plan. That's possible, I suppose. But there's a structure and a waterfall in the December 16th plan that actually has a pathway to distribute value to FTT ahead of the preferred equity. So it's basically in between the most junior creditor class, which would include probably unsecured creditors of the GUC, i.e. Alameda silo, potentially regulatory fines, potentially the IRS claim. So in that bucket, but senior to the VC preferred equity investments into FTX. So I thought that was kind of unusual because there is a probably less than 50% chance, but there's a real chance that the ultimate recovery for certainly for account holders in FTX is par or in excess of par. And one of the other failings of the plan is there's no contemplation for any incremental value, not even in the form of interest flowing to account holders. So right now, if there was value that was distributed in excess of the total amount of account holder claims, that would flow through the waterfall to more junior classes. And there would be a maximum of 100 cents on the dollar based on that November 11th, 2022, conversion. And we don't even have those prices. Like, one of the technically very unusual things is we obviously know it's going to be based on a November, or highly likely to be based on a November 11th conversion price. But I've never seen a case where 13 months into it and there's no conversion pricing.
The idea that claims are going to be valued at the day of the bankruptcy petition seemed to be a confusing thing for a lot of people on Twitter, and a lot of people were shocked that the title of the coins belong to the customers, not FTX, versus something like Celsius. How can they value it in US dollars when Bitcoin was $17,000? This isn't fair. What are your thoughts on that? Were you shocked that they decided to say that it was valued at the day of the bankruptcy petition, even though in the terms of service, it said that the title of your coins belong to the customers? What are your thoughts on that?
Well, as you pointed out in some of your prior broadcasts, Aaron, like, that's not just the bankruptcy process precedent, but it's the precedent for all other crypto cases: Voyager, Celsius, BlockFi, and Genesis. So as someone that pays a lot of attention to these things, I wasn't surprised. I can understand that it may be somewhat counterintuitive to an account holder that is aware that the terms of service provided that they retained title to digital assets. There's a lot of nuances. One of the nuances is that retention of title by the account holders only applies to digital assets and not fiat. And so if you contributed digital assets and if you had digital assets in your account, but you were frantically trying to withdraw value in the days leading up to the bankruptcy and thought it might be better for you to convert your digital assets into fiat, thinking that might be an easier way to withdraw. Well, if you did that, then under the terms of service, you lost title. So that's number one. Number two, it's difficult to, not impossible, but it's difficult to logistically respect that retention of title when there's been value that was destroyed and a conversion of the original assets contributed or deposited into an account and what the debtor owns. So if you're an account holder and you contributed Bitcoin, apparently what part of the strategy of FTX was they just took in large cap liquid tokens. They would immediately trade out of it and speculate on altcoins, sell other large cap liquid tokens for cash, and invest in various ventures, promotion, VC funds, etc. You have to think, if the debtor wanted to respect the rights of creditors who actually did retain that title, so i.e. they contributed a digital asset and they never traded out of it, they just continue to own digital assets. How do you physically do that when FTX traded so much and converted into other assets?
Before this announcement, people maybe thought this whole FTX 2.0 was going to be a thing and people would get maybe more than their claim. Similar to maybe what could happen with Celsius, still completely unknown about that, where there could be some reorganized company and therefore they could get some crypto, and the reorganized company equity or the newco equity would make them over 100% whole on their dollarized claim. Now that is highly unlikely for a reorganized company, what are your thoughts on people holding on to a claim that has no crypto upside right now? How do you feel differently now maybe than you would have maybe a few weeks ago?
I think I'm probably more optimistic about holding, and I can think like a holder because we actually own a lot of claims ourselves. So just maybe 1 minute about us. So we run a crypto claims exchange called Claims Market, where we match sellers of crypto claims with buyers. So we run it as agents, and we just get a separate administrative fee for that role of connecting buyer and seller and making sure the whole transaction runs smoothly. It's difficult to find investors that want to own and buy claims below $100,000 face amount as of the November valuations. So for smaller claims, we also buy them. So we're prop buyers of small claims that are difficult to market to investors, and we're brokers through claims market of larger claims. And so we own a number of smaller claims. So I can definitely, easily switch hats and think like a creditor. As you pointed out, they did monetize or sell 1.8 billion of crypto in the last 2.5 months or so. And so as we move forward in time, the case is less and less about crypto appreciation from here. And it's more about the VC portfolio, which is basically GDA, the miner, and of course, Anthropic, the AI company, together with various litigation assets for clawback against various entities. And we're also moving forward in time. I started talking about how the company's lost momentum. I think that's true, but it still has really good momentum. And so I'm still expecting a first distribution by the end of next year. So about 12 months from now, I think if we haven't already received the first distribution, I think we'll be in the final stages of receiving one. You're right. The nature has changed from just relying on crypto appreciation. The good news is we have a lot of that behind us. I mean, some might criticize the exact prices that were realized in the last 2 months as Solana ran from 20 to 80. I think the case is still pretty interesting. And we're not recommending that anybody sell their claims. People that want to, they can contact us, and our job is to get them the highest price possible and the fastest, smoothest closing process possible.
Do you think that the IRS's insane $24 billion claim is really going to slow down the process of getting people their money?
I don't think so. I think there's a lot of reasons to believe that it will be junior to account holders. That's obviously the way it's classified in the December 16th plan. We also put out a post about 6 weeks ago, just identifying a Department of Justice memo that was made public earlier, stating that the federal government's position was that claims for unpaid taxes, whatever the quantity is, should be junior to the claims of victims. I don't think it would slow down a first distribution. I think the magnitude of that claim being in junior position in the waterfall could dilute recoveries of non-account holder creditors.
Got it. So some people will be affected by this enormous claim, but
I think, sort of non-account holders that had contract-based claims, either, vendors or some of the stadium, owners that had sort of advertising-based claims, intercompany claims that might, potentially benefit Alameda entities, they could be diluted by this.
Anything else from the disclosure statement that just came out that surprised you? I'm thinking the amount of political donations was one that stood out to me. $195 million. Just as a side note, how did you feel about that, or anything else stand out to you?
I've read other comments suggesting that the amounts were in that range, maybe not quite that high. I think that's one of the biggest reasons why we have a war on crypto. Because if you look back at how US presidents have acted when the president gets too close to a controversial party, the president doesn't explain, doesn't apologize. The president finds a scapegoat and kills the scapegoat. So in the Bush 2 administration, Bush 2 was too close to Enron and too close to Enron executives. And as a means of deflecting criticism for being too close to Enron, because Enron back then was like FTX. It was just the worst example of sort of misdeeds. It was a shibboleth. You couldn't even say the word. And so what did the president do? He found Arthur Andersen, the auditing firm, because they were the auditors for Enron. They launched an investigation against Arthur Andersen, and they destroyed Arthur Andersen. 20,000 people lost their jobs, and the company was liquidated and ceased to exist. So now I think the one result of all those political donations, and depending on who you ask, Biden was, I think SBF, I think, was the number one or number two donor to Biden. And so once again, president gets too close to a controversial character, doesn't apologize, doesn't explain, finds a scapegoat, FTX and all of crypto, and tries to destroy it. I think also the politicians collectively have a problem, because if they have to return that, if FTX essentially misappropriated, looted customer assets that it didn't have title to and made a contribution of an asset or proceeds of an asset that it never had title to, then the recipient never should have received that. So I also imagine that for the recipients, it's a real problem for them. I mean, going into November, there's 11 months until the presidential election. Can you imagine what would happen if they have to give that money back? I think there's a lot of back channel lobbying going on, slowing down any type of a resolution of having to return any of that until after November 24.
Interesting. I could totally see that. It's so confusing. And then Sam's parents, their ties to the parties, and not to get all conspiracy theory.
That's a separate, interview. That's a whole different topic.
We'll do that. We'll do that one. I want to get all into the weeds of the conspiracies in your brain.
I think one issue that we highlighted, which was the weaponization of KYC. I mean, KYC is another aspect of the war on crypto, and especially as it applies to FTX. So for account holders that don't pass KYC after a few warnings, their claims will be eliminated. So whoever is listening to this, please do whatever you possibly can to protect yourself and make sure that your KYC is complete. It's serious. One thing that wasn't really surprising to me, because I've seen so many of these plans, but I think is also worth mentioning, is for non-US holders of claims, there will probably be tax withholding. And that withholding rate, depending on the country that the account holder is in, depending what kind of tax treaty they have with the US, that withholding rate could be as high as 30%. So let's say we're in a scenario where a year from now, $100,000 claim, they're making let's say 50 cents on the dollar distribution. So you think you're getting $50,000 in cash, but they actually withhold 30% of that, or you only get $35,000 in cash. So that is a real risk for all non-US creditors that aren't in a jurisdiction where there's no withholding from distributions to them from the US. I think one other relevant thing that your viewers, that your audience should know is, and this is often a misconception in bankruptcy, that when they ultimately make a distribution, whatever the claim is worth, that creditors will receive all of that upfront in one installment. But there's an obvious structure in the plan for multiple distributions, and it makes sense for a lot of reasons. The easiest way to think about it is whatever FTX holds today and whatever it's likely to hold a year from now after various asset sales, there'll be liquid assets, dollars, that it can distribute immediately. And there'll be numerous other assets, the VC portfolio, to the extent it's not monetized, less liquid tokens, like, for example, locked Solana, and the litigation assets that it has, the clawback claims against various recipients. So those assets, they're real, but they're not in cash, and they're not in a form that can be distributed to creditors. So there will be a series of installments distributed to account holders. And right now, I'm thinking whatever the claim is worth, something on the order of maybe half, about 50%, will be distributed by the end of 2024. And then there'll be periodic distributions thereafter, probably once or twice a year for the next several years.
So people need to check in with themselves to be like, well, how long do I want to wait? And again, we're not telling you to sell your claim, but I mean, it is something to consider. If you have a claim, it's like, do I take the money now and invest it in this, so I get the full upside of this next bull run, goodness, or do I wait years? And that's everyone's decision.
Yeah, and I think there's a reasonable chance that it could be a very high value case, but whatever it's worth, again, it's the first distribution is at least 1 year away, and it's the first of several installments.
And you're not getting more than 100% of your claim. Do you see that changing?
I think it's fair for creditors to receive post-petition interest that's not provided for in this plan. Typically, if there's not a stated interest rate, and I have not checked the terms of service to see if there is a stated interest rate in the terms of service, but if there isn't, then it would typically be the federal judgment rate, which is around 4 or 5% today. I think the ultimate claim with that interest applied to it could be maybe 5% per annum. So for a 2-year case, you could have a claim that's 110. So let's say it's 100,000 as of November 11th, 2 years of interest at the federal judgment rate, you have a claim at 110. So you'd be capped at that 110 recovery.
Got it. That's interesting. That's good to know. All right. Well, hey, thank you for chatting. You have a wealth of information about this stuff, so it's always good to hear from you.
Aaron, thank you very much for inviting me to your show.